Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
We're going to talk about the Bank of America no down payment mortgage they just came out with.
Mm-hmm.
It's controversial. We're going to warn you there. I'm going to read the headline for the article, and then we'll talk about some of the stuff in it. So, Bank of America tests no down payment mortgage for minority communities. Prospective borrowers evaluated based on their payment history. Banks long accused of discriminating against minority buyers. So, why are they doing? Why would a bank? Why are they doing this?
Their party line or my opinion?
No, just why do you think they're doing it?
I think they're doing it as a PR stunt.
Okay. We'll stop there, and then we'll go talk about the rest of it and why this is likely not that big of a deal. They're making a big deal out of it, but I don't see it causing actual help. Okay. For actual people that need loans. Okay. Bank of America Corp started a trial program aimed at helping first-time home buyers in Black and Hispanic neighborhoods by offering mortgages that don't require down payments, closing costs, or minimum credit scores, all considered long-time obstacles to narrowing the gap between white and minority ownership.
Okay, so let's kind of attack these one at a time.
Okay.
As far as closing costs and down payments, a lot of states, including Nevada, have down payment assistance programs. Some banks have down payment assistance programs that are not related to what you look like, what you believe in, how you view yourself or anything else.
Right.
So that part I think is unnecessary. As far as credit scores are concerned, again, a lot of these down payment assistance programs are a lot more lenient with credit scores. And remember, your credit score is based on your payment history.
Okay.
And Bank of America says, well, we're not going to worry about your credit score, but we will take a look at your payment history. Well, your payment history makes up your credit score, so I'm not sure that I see the difference.
Customers using the program will be evaluated for a home loan, not by credit scores, but rather by factors such as their history of making rent, utility, phone, and auto insurance payments on time. So here's a problem. What if you don't drive a car, or you take, in a lot of places, people take public transportation. Mm-hmm. You may borrow a relative's car. You may not be insured. Even though the car is insured, the driver may not be insured. Phone, you may not be on. I mean, we know adults in their 20s who are on their parents' phone plan, right?
We know adults in their 50s.
Okay. Utility, you may be living with somebody, or you may not be the primary person on the utility bill, meaning you may rent from somebody, but they paid utilities.
Right.
So you don't have a utility bill, and your rent payment is, that's just a landlord stating you did or didn't make your rent payments on time.
Right.
So it's still subjective.
Yep.
And to your point, if somebody's not making their payments on time, their credit history is bad, so it probably doesn't. It's kind of defeats the purpose.
Right. So I think in a perfect world, somebody with a -1 credit score would qualify. And what I mean by a -1 credit score, it is a real thing, by the way. So a -1 credit score is generally somebody who has absolutely zero credit history. So they don't have any credit cards. They don't have any trade lines, so that's why they have a -1 credit score. So under those circumstances, maybe that person would qualify.
Okay. In a statement Tuesday, that was okay. The program will be tried out in certain predominantly Black and Hispanic areas of Dallas, Detroit, Los Angeles, Miami, and Charlotte, North Carolina. So only in these 6 cities and only in certain areas. Bank of America wouldn't disclose the planned size of the program, which may expand it to other. Okay, so there's 2 problems here. One is it's only in 6 cities, it's only in certain areas, right? So we're not really helping people that are trying to buy a house in Utah.
Right. So, in Bank of America's defense, they are, probably using this as a trial program to see how it works out.
Okay. Here's an interesting one. Applicants don't need to disclose their race, and U.S. Census data will be used to determine eligible neighborhoods, predominantly Black or Hispanic, and there's no min or maximum loan size. That was the other thing.
Okay, so the first point, when we fill out race, we can say we're this, that, the other thing, or choose not to disclose. So I don't know how that's really relevant.
Okay. Here's the ultimate problem with all of this. It's not really going to help people. First of all, I don't think it's going to actually help people.
I don't know that it's intended to help people. I think it's intended to give Bank of America some positive PR or some PR in general.
Okay.
Because look, Bank of America is in the business of making money.
Right.
Okay. And this whole thing is about finding a market, finding a niche, and we're in an environment where people are seeking less loans, and this is just looking for another market.
Okay. Now, you're probably wondering, well, this is a real estate channel, and loans do touch real estate. But we have this thing in real estate, which is national, called Fair Housing Act.
Mm-hmm.
And it has all these different restrictions. One of them is redlining, one is steering, and then the other is just fair housing, which is discrimination based on advertising to where a person could or couldn't live. Okay. So I'm going to put up the first slide. I'm going to put the slide about steering because I think this is the most likely. Steering is the practice of influencing a buyer's choice of community based upon one of the protected characteristics under the Fair Housing Act, which are race, color, religion, gender, disability, familial status, or national origin. So if you're giving people a loan, incentivizing them to live in an area that's predominantly a certain race, I mean, and I'm not an attorney and I don't work for FHA, I would think that's steering. Like, I would think that that's a problem.
Right. So as real estate agents, we do not, and this happens more often than you think, where people say, well, I don't want to live in a neighborhood with these people, or I want to live in a neighborhood with these people. And my answer is always, well, you go pick out the neighborhood and I'll go show you houses in whatever neighborhood you want. But I'm not going to sit there and say, well, this is that type of neighborhood or that type of neighborhood.
Right.
That's not something that I do. And this is kind of what's going on with this. And this is a big concern. So from the steering perspective, obviously, we feel that this is a violation of the steering principle. But, what also concerns me is that it's limiting where people can purchase properties. So as an example, I live in this neighborhood and maybe this neighborhood fits this criteria, but maybe I want to move to a different neighborhood for whatever reason. Maybe it's closer to work. Maybe they have better schools. Maybe I have friends over there, whatever my reason is. But now Bank of America is saying, no, you need to stay in this neighborhood. You can't go to this other neighborhood. And that concerns me. That's just fundamentally unfair to me. And I think that while Bank of America may be well-intentioned as far as maybe trying to help people, more likely than not, they're just looking to have another loan product. But whatever their reason is, I think the unintended consequence is that it can be harmful to people. It can deny people the opportunity to live where they want to live versus where Bank of America wants to make a loan.
If the banks, and Wells Fargo is not a whole lot better, all the banks have publicly come out and put their percentages of loans and refis that they've given based on ethnicity. Mm-hmm. And Hispanics and blacks have the lowest. Mm-hmm. For the banks, for whatever reason, they have the lowest. But if this doesn't solve the problem, and why it doesn't solve the problem is because out there today, maybe somebody watching this video is saying, oh, I like this, but I don't live in one of those 6 cities. And even if I did, I'm not in one of those neighborhoods. I don't want to move to one of those neighborhoods. I'm in Tulsa, Oklahoma. And I want to buy a house in Tulsa, but I can't because I have a 530 credit score and I can't get a loan. So what I would do is if I was running a big bank, and we had a problem, and I wouldn't try to steer people into certain neighborhoods. I would just say, what we're going to do is we're going to have a program to help you get your credit score up, and we're going to educate you and help guide you in being more fiscally responsible. And we're going to build some tool that will let you in real time, like, track your credit, see all your decisions and how it affects your credit. And then, like, if you tell us you want to be in our program, our pipeline to buy a house within the next 3 years. And then we see you took out an auto loan. We're going to come and say, hey, if you take out this loan, this is how it's going to potentially impact you buying a house. And then this is what you need to make sure you do. And then we'll send you reminders. Hey, make sure you make your appointment. Like, they should be doing that with people that they think are at risk. And if they want to make a difference in that community, because saying, hey, you're in Detroit, here's a predominantly minority area, go ahead and buy a house over here, but this other area, don't buy a house over there because it's hard. You're making a disincentive to buy a house in maybe an area they would want to live, and you're incentivizing them to go live in another area. I just it just blows my mind that like this is actually a thing and that people aren't, this hasn't made national news. I mean, it has made national news, but I don't like it at all. I don't think it helps people. It doesn't. I think what you said, the bank is doing it because they're trying to, hey, we're gonna help, make ourselves look better by creating this program that maybe helps a few people, but there's
right. Like I said, I think it's virtue signaling, and I think it's trying to push a product onto customers that otherwise that they would not have. So I think it's really unfortunate. As far as your point, as far as educating people, a lot of the state down payment assistance programs do include education. The home buyers do have to take a course, and that is an effort in that direction for financial literacy. And financial literacy is something that I think is important for everybody. There are a lot of tools out there. So I'm just going to put Credit Karma out there because I think everybody knows about Credit Karma. It's free. And you can go on there and you can do different scenarios and say, hey, if I borrow money for a car, how does that impact my credit? If I pay off my loan, how does that impact my credit, and so on. So there are lots of tools out there, but again, financial literacy is something that's important, and I think that Bank of America would better serve all communities, not just particular communities, but all communities, by putting together a toolbox with online classes, with maybe even in-person classes for financial literacy. And whether you're a Bank of America customer or not, having access to this, I think, is more valuable for everyone, and including for Bank of America, because it would make for better borrowers who are more likely to be successful borrowers, both in obtaining a loan and maintaining that loan in good standing.
Yeah, I think you just nailed it. I think that's the perfect answer. Seriously. I mean, I get, it seems to me that the details of the program are still they're even more cumbersome than a regular loan, because you have to actually go and get counseling at HUD and then get an approval from HUD to do this. And then, so you still have some other entity that can say yes or no. And then you still have to meet their criteria, whatever it is. It's actually less defined, because they're not saying you need a 620 credit score. They're saying you need to have made your payments, but what if you missed one or two? Does that mean you can't get the assistance?
Right.
And does it really help you if you're not really qualified, but you somehow are able to get a loan and you buy a house, and then you end up not being able to make the payments, and then let's say you get foreclosed or you miss loan payments? Now you put yourself in even a worse situation to go buy a house somewhere else, because if you have the worst thing you can do to hurt yourself in wanting to be a homeowner is to make a bad choice on your first purchase. Like purchasing when you're not financially ready, you don't have some savings to make payments, you're not, your finances are rocky, and you go in there and you start missing payments, because I guarantee you that will stay in your credit forever, and then you'll have a very difficult time getting a loan in the future. Well,
and remember, while they're saying that your credit is not that important to them, that's great, but your credit is important for your car insurance premium. Your credit is important maybe when you go to get a job, because they might care about that. So there are other reasons when your credit becomes important. So if you're missing or you're late on your mortgage payments, not only is it expensive because the late fees are expensive, but it also negatively impacts your life going forward. So that's why I said that financial literacy and this education is a good thing. The other thing that I think would be a good thing is that if they, whatever loans they approve under these auspices, I think that ongoing financial education is important. So it doesn't end once these people get the loan and close on the house. It should be an ongoing thing, because that is what is going to keep these people going forward in a good way and improve their lives. What we
Right.
don't want is, we don't want them to be abandoned once they get the loan, once they get the house, and then they're late on payments, they miss payments, they have negative things happen to them, and then that's a bad thing for them going forward in their lives. We want them to build good, strong, stable financial lives.
And it shouldn't matter what race. It shouldn't matter. It literally shouldn't matter. So
I'm very sensitive to that, because I'm probably one of the last generations that was not necessarily treated that well as a female.
Female immigrant.
Well, for me, it was a female at a university.
Right.
Because one of the things that I got told when I went to university was, you're female, you're here for your MRS degree, don't bother me.
Right.
So it's kind of that same thing that's going on here with these people, that we need to make sure that everybody has these educational opportunities, and that they keep going throughout their lives, really. And I think, like I said, it's very beneficial for all the financial institutions to say, hey, if you get a loan from us and you have less than a whatever credit score, guess what? For the next 3 years, you have to do maybe a quarterly 1-hour class with us, so that we can make sure that you stay on track and you are in a good financial position going forward. Or maybe they have access to some sort of person that can answer their questions, or whatever assistance they can provide. That is money well spent to help these people be financially educated and financially literate and have good lives going forward.
We will check back in on this subject in a few months to see if it actually moved forward like they said. If there's a chance that somebody, NAR or some other entity, might challenge it and say, hey, look, this is steering, it's redlining, you can't really, shouldn't be doing this. There should be, find a better way to do this. You get the intent. And then because it doesn't look like it's really helping people. It looks like it's a facade. Mm-hmm. That's my opinion.
Yeah.
So
we'll see how it goes. Hey, leave us comments and tell us what you think. Somebody in another video actually asked us questions about this, and that's what prompted this video. And so we want to know what you think. We obviously have some definite opinions, and we're sure that you do too. So we want to know what your opinions are. Please like the video, share the video, and leave us your comments, and we will see you on the next video. Bye.
Bye.